What is going on, boys? Today is going to be the Diver Deeping series. Diving Deeper, what am I saying? Diving Deeper series day one. What this is, it's going to be like analysis of what I was seeing live in comparison to kind of how I planned out my trade and how I took my trade. And yeah, so it was Nike. So Nike was the trade of the day. Um, so this was a chart that I made a plan for just because of the compression within the name. And with the market being relatively dry and we've had some discretionaries moving and we had some discretionaries dipping, and this one is just really coiled with a sell side move and then obviously a push back into the upper ranges of those of that sell side move after the secondary retest of the earnings candle over here. That is obviously a failure that is established from up here, so that's bearish for the time being, and then we move down and then we obviously gap, we capitulate for 3 days on end. Obviously, that's a little bit overextended. It's in the midst of a bull gap down here, so keep in mind this is not entirely filled, as that is the close of that gap. But then we start, making our way up. We put in a lower high resembled in red, and then we put in a sweep, and then we obviously start just creating this 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 days of compression, right, with a inside bar leading us into the new week. So this was Friday's candle here. This is Thursday's candle of last week. So this was a very important chart for me just because of the fact that this is the inside bar high, the inside bar low is all the way down here. And what happened was we kind of just traded sideways leading into the end of the week. If you come over here, you're going to see how Friday, we sold off, and then what we did was we kind of just sat here and sat here and sat here. We never filled the gap. Now this is the candle come Tuesday that really caught my eye. So I had this on a watch just because of the compression. I wanted to see something that looked just a simple trade, just a break, a base, and then the expansion that led us to the upper extremes up here, which would be like a $2, $3 move, which is a ton on Nike given the fact that we are trading lower implied volatility here. Um, but yeah, in terms of just looking at this chart and saying, oh my gosh, this was a support established over here from however many days ago with a gap up. And then from there, what happened was we just created 3 days of support. And the third day of support was actually swiping the previous 2 days. So this is the previous 2 days. Third day support was the lowest low in which we made within the confines of this over here. And then that just really goes to show you that if we do start making higher lows off of this spot and then continuing way higher and then, pushing higher, building internal structure, and then obviously that internal structure would lead to the expansion, then I'd be very happy. So let's just go back to the hourly chart and talk about how, okay, I like to mark out previous day highs, inside bar highs, this being the inside bar, right? There's no other inside bar. This is the range that we're trading within. This is Thursday's candle. So whenever we go here, what happened yesterday? So I actually added some calls yesterday. And all this really was a quick sell right off the open. I noticed that there wasn't a lot of volume behind this sell, and it was all just into the bottom of this gap to fill this. Okay, and then from there, that's whenever I started to notice the stronger buyer coming in, and I seen a stronger buyer within the tape start moving its way in here, and it was really notable to me because this was the first um, kind of action of the day. How you can see how there's really no crazy volume here. It's more or less just a gap down, a sell after the gap down, and then a pop, and then another double bottom, really short time frame. So this was where I had to use a little bit of patience here. But once I started to find that momentum off this gap fill, and then I started to see how this was like reclaiming and pushing right back up through the gap as well as like the support from Friday. That's whenever I started to say, hey, I'm going to take a long here. What I'm going to do is I'm going to try and see if I can get this candle to close above the opening print. This was the opening print for the time being right over here. And then if I can get that to close above the opening print, I'm going to obviously stay within the trade and milk this trade out up into like potentially this resistance all the way up here, 92.70. Keep in mind, I was trading bi-weeklies here. So like a move from my execution off of over here, off of yesterday's close, I think it was actually a reclaim of. And when we're looking at this on the 1 minute, it was kind of easier to tell where I bought this, which was like right around here, right around into this momentum up here, and then the expansion led us all the way for like a 60-cent move. I was up a decent amount, but it wasn't anything crazy, and I thought we could get a little bit more juice out of this. So what I wanted to see this do was either pull back and hold like previous day resistance, and if it didn't do that, I was looking for swing low, swing high to the equilibrium for just this to hold the 92 area. Maybe it's going to play out more in the hourly time frame, but yet again, this hourly bar and kind of how we got the compression leading into close led me to believe that this was likely developing some sort of external base structure. So then that looks like this. Up, down, and then obviously we created some sort of inside bar, and then we have all of this support, and I thought it was going to do something like this, and then lead to the expansion back up, and I thought we were kind of within this phase over here of the external structure being built within the confines of this whole entire external range of this inside bar, or just the overall compression that led from big expansive moves that were heavier swings into tighter confines of a range that we have here to play with. So the execution spots are relatively close to one another as well as the risk. So everything's really tight over here. So whenever we're looking at this and we go, oh my gosh, okay, same exact thing happens again. We sell off the open, nothing too crazy on volume, and then from there we get a buy wick right off the open, and then we start obviously finding the momentum. Now, this is the same general thing, except we're just within a wider perspective of a support. If you're looking at this from like support, false breakdown, support, failure, support, failure, gap up, support, 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 gap fill, maybe a higher low off the gap fill is what I was thinking. Now this came down a little bit more than what I would want to see, and I sold my call side exposure from this execution over here, like up here to close. It was like break even, something like that. I think it was either a very small loss or a very small win, but break even. So what I noticed about this one and what I wanted to see here was this is your opening range high, that's your opening range low. Whenever I noticed how there was a buyer stepping in here again, there wasn't a lot of volume. If you go into the one, I don't really like the 1 minute, but when you go into the one, really low volume right off the open, 9:30, and then we find a buyer, and then it kind of, or I'm sorry, that's not the day. Um, or no, this is the day. And then we obviously get to double bottom, and then this led to the expansion. Now, why did I still like this long? It wasn't just because of this little candle series where I quote unquote, found a buyer, because that's a little bit speculative down here, but just given the fact that this was consolidating off of equilibrium into close of the previous day, and this was just, it was a really nice move higher, followed by lower volume, no crazy notable sell. The only volume ramp we started to get was with a buy wick off of it into equilibrium, and then we started to sit here and saturate this area on heavier volume, and then the volume just dried up after we moved a little bit lower towards that golden pocket. So I figured a buyer was kind of loading here, or there just was the name was just dry of sells, if that makes sense, right? So whenever you're looking at this level, you can see how it's kind of like historically respected um, break base move. And then obviously it tried to establish a support. It broke beneath it and moved like butter, broke back above, moved like butter, try to make a support. This is all basically, guys, all this really is. This isn't necessarily just looking at historical price patterns, but it's more and less just looking at like the midway point, the equilibrium of this established range that we have here, right? So anybody who does take control of this area, and what I mean by that is take your little gom box or your fib tool and just look from the high to the low of the extremes here, and that's exactly what I'm talking about, right? So whenever a party does have control of such tight compression, you're going to see the equilibrium spot, which is like 91.80 into 92. being defended for then a break, a base, a higher low, and then a move higher, right? Or just a move higher to wipe out previous day highs or inside bar highs that weren't tapped yet. What do we notice here? Thursday bar is the inside bar high. Has this been tapped yet? No, this is the second highest high we got ever since the Thursday candle was right over here. And that was loading, that was where the buyer was loading. So I knew coming into this today that this was going to be potentially alongside focus, targeting this high. Funny enough, that's where we scale half, and boom, we get the break, we get the base, we get a flag off the previous day support. We hold the opening range high, which is the first 5-minute candle's high. And then we obviously, this was a very nice, strong, healthy looking move, followed by like some sort of bull flag look on lower volume. And then that led to the expansion and the continuation. So very easy trade to hold. Nothing really alarmed too much on my end over here. I executed on this candle. So somewhere in here, I executed on like the break, the base, the retest. I bought a little bit more over here. I had some from over here. And it was overall just a really clean setup where we're showing little to no signs of a seller. The spread started to really compress from a really, really, really smaller time frame, or even like the 5, and then that led to obviously the breakout, the expansion, and all this really is into, guys, is a massive, massive range of resistance. I mean, look at this from here to here to the inside bar high is kind of the target and the range we're looking for. Executing biweeklies down here at 91.80 into 92.70. That's about $1 move on a stock that's less than 100 bucks. That's over a 1% move on the underlying for the day, for the trade, I should say. And that trade there yielded 55% at highs. I scaled half for 50%, or like 3/5 for 50%, something like that. And then I cut the rest on this right over here. Swing low, swing high. I was looking for maybe like a higher low here and then the continuation, but the market started to look weaker. And then I just kind of like cut them on this base because it didn't look so great. So yeah, that's that. That's the Nike diving deeper day one. The market right now has been a little bit dry. It's funny because this little series that I'm going to be doing is discluding a lot of the really, really, really nice trades, like Tesla, Solar, DraftKings, things like that. So this was just how I was looking at this live. Um, try to keep try to keep every little concept that you heard about in this video in the back of your head when you do trade, because there's no reason you couldn't be catching a move like this. You could be buying the bull flag, you could be buying this candle, you could be buying the support, however you really want to execute, guys. Just don't be the guy that like fills up here. Okay, so yeah, very simple trade. Just don't overcomplicate it. It's a simple target to target trade where we're looking at an inside bar, we're looking at a false breakout this day, but we're looking at no strong follow through with a sell, and more or less just a base off of the golden pocket and equilibrium in the opening print range, and it just kind of was glued to that area with no strong sell anomaly. And then we get another gap down, we rip right off the gap down, we reclaim yesterday's afternoon support, we bull flag off of it with a 1, 2, 3, 4, 5, 6 bar series. Bull flag here, really low volume, and leading to the expansion. Volume starts moving its way a little bit higher on the bull flag break, and then the spread really compresses. And then I didn't see any strong follow through or seller within the tape, meaning any sort of ask order that was sitting here, or any sort of bid that was really, really eaten up from the buyer perspective that was trying to move its way higher, like this and this and this, right? And then kind of what buyers did was boom, eat, 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 and then sellers eaten, and then expansion into what is above us, where the smarter seller would be, resistance. Guys, it's really not complicated. Like, look at this chart. It's really not too complicated other than maybe the execution down here. This is clean, very simple. Even this over here, you could even take the yesterday's gap close. That's not what I did, but you could do that. And then look at the close off this bull flag and then buy in here, risk here, and then obviously, yeah, there's the move. So, yep, that's about it. Like I said, we're looking at about a 1% move on the underlying on this move. That's all you need, especially for a name like Nike. Now that's a little bit different with a name like Carvana or even like Solar or even names like Tesla, but this is Nike, guys. It's a consumer. Remember we talked, you guys should know by now how to take advantage, why I sometimes look for these consumers because the moves may not look big on a chart, but you got to really keep in mind of the implied vol, right? And obviously you also have to understand that why is the implied vol lower? Well, that's because the daily range of a consumer is lower. So what does that mean? That means that the lack of continuation can really be a thing here. So if you do get that continuation, you're getting really, really, really paid for just a decent sized move, but you have to be de-risking the position and taking profits at the local targets, especially on bi-weeklies or weeklies. So that's it.